The Fed rate cut market just had one of its worst days in months. In the past 24 hours, the probability of a cut at the next FOMC meeting crashed from 56% all the way down to 42, a 14-point drop. Nearly $2 million in volume moved through this contract today. Something shifted fast. Let's break down exactly what happened. 3 headlines hit in quick succession, and none of them were friendly to the rate cut case. First, the inflation print came in hot, 3.4% versus the 3.1% consensus. That is a miss in the wrong direction. Inflation is not cooperating with the Fed's timeline. Second, Powell's remarks ahead of a closely watched preview event struck a hawkish tone, the kind of language that signals do not expect us to move soon. And third, 2 actual FOMC voting members explicitly pushed back on near-term easing. When the people who hold the actual vote start talking this way, the market listens and reprices hard. Here is what this probability move is actually telling us. The contract went from 56% to 42, flipping from a coin flip slightly favoring a cut, to now more likely than not that the Fed stays put. That 1.8 million in daily volume means this was not noise. Real capital was repositioning hard and fast. The market has 3.15 million in liquidity, so this is deep price discovery, not a thin contract being pushed around by a few players. Informed participants are actively recalculating their view of what the Fed will do at this meeting. Now here is where the picture gets sharper. The smart money flow signal on this contract is pointing to sell. In prediction markets, sophisticated participants tend to front-run the broader market. When they are flowing toward no cut while the probability is still sitting at 42%, that suggests this may not be the bottom of the move. If the smart money signal holds and more hawkish data arrives between now and the meeting, we could see this contract push down into the 30s. Keep a close eye on that directional flow. It has been reliable on Fed markets before. This pattern has played out before. In late 2023, prediction markets were pricing aggressive cuts well into 2024. Then a series of hot inflation prints, similar in nature to what we just saw, knocked those probabilities down 20 to 30 points over several consecutive weeks. The higher for longer narrative ended up dominating the entire second half of that year. Traders who tracked the smart money signals early had a meaningful informational edge over the crowd. Today's 14-point move could be the first leg of a larger repricing, not just an isolated one-day event. The catalyst to watch going forward: the next CPI release, any Fed speaker comments over the next 2 weeks, and of course the FOMC meeting itself. If inflation stays elevated or ticks higher, expect this probability to continue falling. Subscribe now so you are here the moment the next major move hits. We break it down in real time, every time.